Hey guys, welcome to ElliottInvestments.com. Today is Tuesday the 25th of January 2011. Well, straight up guys, we had some pretty shocking news out here in the UK with regard to the fact that the economy shrank 0.5% in the last 3 months of 2010. This was the GDP figures out, and if you look at the expansion that we've had over the course of the last couple of quarters, it's been quite positive. We've had an average of about 0.5, 0.6% rise month on month, and then to get this figure of a 0.5% contraction really is a bit of a shock to the system, especially over that last quarter leading up to the December time. Now, why is this? Well, I mean, obviously you'll have the media blaming the government in terms of the austerity measures, in terms of cutting back on spending and so on. I think a lot of it is to do with this, and I'm sure that will have a knock-on effect on the private sector. However, what you've got to bear in mind is that it really is the economy that's struggling here. And when people talk about the economy, a lot of people talk about the fact that it's an accumulation of companies within the FTSE, whether domestic or globalized, and that's their contribution to GDP and so on. But for me, the economy is all about the consumer. And what is the consumer? Well, it's just an accumulation of buyers and sellers. Now, what are these buyers and sellers? They're people, and people are emotional. That's why technical analysis is so important. And also, the split has to be 50-50 between fundamental and technical, because you've got that emotional factor of people, and you've also got these figures of these companies reporting and these countries reporting, whether it be gross domestic product, or CPI figures, inflationary figures, interest rate cuts, and so on. It's all kind of interlinked. It's all a bit of a symphony, as I say, and you have to be aware and open your eyes to what's going on out there. And for me, you might have a look at these articles, and I'll post some articles in the description below discussing this. But the FTSE's only down about 0.35% on this pretty shocking news that we've had this morning. Now, why is this? Well, obviously you've got sterling. The sterling sold off quite significantly, and what happens when countries' currencies get devalued or they have a bit of a fall? Well, then obviously the export markets are going to enjoy this, and a lot of the companies are going to get a bid to the upside. Not only that, but you've got these inflationary pressures, and if we look at the FTSE chart here, it's held up pretty well. I mean, we only had a bit of quite a big sell-off towards the end of last week, and that's been about it really. So, I mean, in terms of inflation, yeah, sure, this is going to give upward bias to the markets, but something like a GDP contraction of 0.5%, as we are meant to be recovering, is really going to stifle chances of a big rally. And I think somewhere around here might be a great point to enter. If you look at the Dow Jones charts and the S&P and pull them up yourselves and have a look, you'll see the pretty astronomical run that they've had of late. And for me, they're just starting to look a bit tired. Coincide that with the fact that we do have this news out on Friday, the GDP figures out in the US. It'll be their turn to report to the markets. It could be quite an interesting and quite a crucial week coming. Not only that, just with the FTSE, you are holding on to this upwards diagonal channel, if you will. I do see us breaking down below this towards the end of next week. Again, that's perhaps not something I'd be looking to take a punt on, but if the formations play out, then yeah, sure, I think that's definitely very possible, and then it would be a very good buying opportunity, especially as you've got this MACD, which is obviously a lagging indicator, looking to fall below the neutral line, and then you've got these stochastics looking to come back up again. So pretty interesting week overall with regard to the economy, but that was definitely a bit of a shock for me, that news out today. I was expecting probably a small increase, but obviously markets are really unsure about all these austerity measures and so on. Okay, yesterday I was also, I brought you a video about Games Workshop Group. Now, I told you that I was looking for a short entry, and I did play the two short entries, one slightly longer term and one slightly shorter term. I actually closed my shorter term play just because the figures out were actually not that terrible. There was no big surprises. Yeah, sure, for me, a slight surprise was that their intellectual property figures were slightly worse than expected, but the markets had already built this in that trading statement. So no great profits there. I think that they opened up about 0.75%, 0.86% down today. I was happy to take a very small profit on that short-term trade. I am still in my longer-term trade, and I've got a target of about 250 to get out of that in profit, and I do think we'll see that. It's one of those that I've had my plans, so I'm not going to touch my trade, but it's something that I will be following, especially as we go into the annual results later on this summer. Okay, that's Games Workshop Group. If you also remember, I was talking to you about Amazon. Now this is a long-term chart of Amazon. It goes back from about 1997 to the current day, and just as you can see, this absolutely fantastic company performed exceptionally well over the last two and a half years or so, after we got that crash from 2008. Here's obviously the .com crash, and then, as I say, we've been slowly trading upwards, and we've had a huge, almost exponential rally over the last 2 years or so. Why is this? Well, as you're all aware, they've kind of monopolized the retail market. The likes of eBay and Amazon have come a long way from simply being a seller of books. And if we zoom in a little bit, just looking from a technical standpoint, you've got these two resistance lines here, which are previous resistance and support. You've also got these circles here, which are the candlestick formations, shooting stars, hanging mans, call them what you will, dojis. They do really signify a turnaround, especially in the US markets. And you could argue that we are getting this. We closed out yesterday at 17682.5 with this nice candle formation, and yeah, sure, I can see us falling a little bit lower today, obviously with that news out in the UK, but I think it's going to be a great entry point around this support line here, which is the 17330. If we just zoom out again, I'll put a Fibonacci line in for you just so you can see how important that support line area is. And I'm just going to draw this from the highs in 2007 to the lows in 2008, and then I'm going to project this forward just again marking up those lows from the midway through 2010. And if we zoom in again, it comes as no surprise that we do have this support line here, which is the top of that Fibonacci line. So again, this area, there's a hell of a lot of support around here, and I can see a nice move to the upside. If we can get a long trade in this channel, then that's definitely something to look out for. And as I say, these guys produce their earnings, I think it's Thursday after the bell, so we've got at least 2 more trading sessions to get involved in these. And as I say, if we can get some sort of a pullback into that support area, then I'll definitely be looking to take this trade on. Okay guys, that's enough from me. Do watch out for those GDP figures in the US on Friday. I think it's going to be a very volatile session. Take care.